Hey traders, have you ever wondered why some stocks are winners and some stocks are losers? Well, today we're going to dive into the personality of various stocks and compare why some are winners and some are losers. But first, let's jump over and answer the question, or at least the first part of a question of why is Google beating the snot out of Amazon. Hey, let's take a look at this. This is a chart from the leaderboard on Investor Business Daily. Notice what's happening. It is up to date. Make sure not. And as you can see, Google is breaking out to new highs. Look at the relative strength is heading up. And look at all the green. Let's blow that up. When you come over and look at the composites and all the information on the fundamentals, looking pretty good. Note a couple of things here is the industry group is 65th out of 197. The group itself has a B plus rating. And so what else can we pick up from this? Oh, a couple other things. The accumulation distribution, C, means that people are buying it. And what I really like, the up-down ratio right here is a 2, which means that it's being accumulated, I won't say twice as fast as the other stocks, but it is basically being bought up. So what do we see on the chart here? Yeah, I'm not going to buy Google. As a matter of fact, we did have Google on our list. We bought it a couple of weeks ago on a pullback into this area here. And now we're just riding along for the ride with Google. Would love to add more to it now that the market is back in, take on full, take on a full position. I'd love to have Google on, with a full position on Google. The other reasons why I like Google and would like to have more of it is it is a leader. It is basically heading up, and it's a great stock to be building your portfolio on. So that's what we've got going with Google. We'll come back a little bit later and talk about why Amazon is getting the snot beat out of it. So let's go ahead and jump back over to. So I want to welcome you today to the Trade Your Way to Freedom live stream. I'm Dennis Wilborn, and I'll be your guide for mastering the swing trades that we're going to be looking at today. Unfortunately, Neil won't be joining us today. He was taking care of some business there back in Delaware. But if you are joining, welcome aboard. Just check in and let me know where you're in. Are you on Amazon? Are you on Streamline? Or just tell me what state you're dialing in from. Glad you're here. And so today I'm taking a look at contrasting both stocks and industry groups, the weaker and the weakest and the strongest. Which leads me to another big question I have is why? Yeah, I'm going to go full camera on this one, okay? Why are the indexes lying to you? And we'll get to the answer to that in a little bit also. But have you ever wondered, why? Why does the small cap, why is it behind and not doing as good as the large cap or the NASDAQ and the spiders? But we're going to answer that question moving forward. Now go back. Don't want to forget to go back to. There we go. The rest of the story. So let's go ahead and jump over into and take a look at what the heck the stocks are doing. First up, we're going to analyze the S&P. The S&P has been performing fairly well. However, what are we seeing over here on the S&P that should it give us concern, or are we just setting up for a potential pullback? That's the big question we have. Yesterday we had a quasi shooting star type of pattern. Let me shrink this down a little bit. Not quite a shooting star. Why is that not a shooting star? That is not a shooting star because the wick on top is not 2 times the size of the body. That's the bottom line. Why it's not a shooting star. However, I'm looking now for a pullback on the spiders to actually pull back probably to the 8-day moving average, or if we get a really more significant pullback, watch for it to pull back to the 8-week moving average. But remember, the 8-week moving average will be about 516 next week. So that would be a pullback of approximately 2%. What's a deeper pullback? Well, a deeper pullback, get it down to, if we get back to these past, where it got down to before, that's about a 6% pullback, well within reason. A couple of things to take away from this chart. One, we are pushing up to new highs on the weekly chart. However, what's going on with our momentum? As you can see down here, the momentum is showing a negative divergence, new high, not a new high. What about over here on the weekly chart? Not really. We really can't tell anything. I'm going to expand the weekly chart. Just take it back just a taste. And as you can see, doesn't apply over here on the daily chart. So I'll be looking for initially just a pullback back into around the 8. The 8 is right in this gap right here. So that would be an approximately good place for it to pull back to. What about our next entity, which is hold on just a sec, which is the Russell. Okay, the Russell, similar type situation. Now, the Russell does have a bearish reversal signal. As of 3 days ago, we have a hanging man. And the hanging man basically is a hammer, but it's at the wrong end of a trend. And so therefore it's called a hanging man. And so what am I looking for this to do, though? Well, one is probably just a pullback since I'm above all the moving averages. As you see here, there's the 8, there's the 50, there's the 34, and of course the 200 is way down here. The small caps have finally gotten themselves into where they are taking off. Look for a pullback back to the 8, or this uptrend line would be another place that it could pull back to. We need to pull back. That way the momentum starts to rebuild. Now, right now the momentum is kind of extended. Allows the momentum to rebuild to get a running start to break through this level, which is this past high. And then that blue line up there is the all-time high. We would love to see that happen because that could spell good things for the small caps. As we go over to the NASDAQ and say, hey, Mike Norton, how you doing? Hey, Tim, good to see you up there. And there, hey, all about English mastery. I have changed my charts, haven't I? Okay, I will do that. Point taken. I'll talk to you later, buddy. If you're wondering, all about English is my son, Dennis Jr. He he does the editing on all my videos, and he does a really great job. And so if you like the job Dennis Wilborn Jr. is doing on editing, please, give him a shout out in the comments and say, hey, Dennis, keep up the great work. And so it's kind of interesting that both you and Mike Norton are right there next to each other. A lot of history goes back there. Okay, the Qs. Qs broke out. However, the momentum is extended. Another one of these situations where on the weekly chart, I now have a new high here, but not a new high here on the momentum on either of them. Now we did get a breakout on RSI and everything, negative divergence. What does that tell us? Okay, because we really haven't gotten a break to the downside. It just tells us to watch it. Be careful. We have a 2-line cluster in the upper level. on the market forecast. However, that 2-line cluster on the market forecast is not as meaningful as the one when it's on the bottom or when it's in the lower level down here. So on the Qs, what am I looking for? Looking for something very similar. Looking for a pullback into the 8, which is going to be about there. If it breaks the 8, look for the pullback down to this other. Let's draw that in there. There's a trend line that's about there. Could bounce off of there. And also watch that 50-day moving average. Great moving averages to plan your trades off of. So that's what we've got going on with the Qs. There we go. And so let's see here. So as I said earlier, do the indexes really paint a true picture of what's going on in the economy? Or do two of them tend to exaggerate their performance and could provide you a false sense of security? So let's go ahead and take a look at, let's go to the next section here. And what's it going to be about? That's a great question. Get rid of my, there we go. So next section, we're going to talk about, hey, if you are struggling with finding a great system to trade, the AutoPilot trading system is for you. We've been operating for, gosh, the past 12, almost 13 years, and I have beat the S&P all, the last 12 years with a really nice average return. I'll put a link down in the description and to show you where you can. I encourage you, come take a test drive. Come take a test drive, and I'll remind you, ask about the discount. You may qualify for a discount for the AutoPilot Premium service. So here's where we normally step in with Anil and do the face-to-face. And so since Anil is not with us, I will do the face-to-face on my own. Notice I am, basically the movements this week have brought us up to we are catching back up with, I'm back on time just about for my 40% per year run. And so we're sitting about 15%. We've got another week and a half or so to go in May. So hopefully we'll be back at that high going into May. And so the topic there we go. I hit a wrong button. So there we go. So let me see if I can start this again. Have you ever wondered about how does the industry group that a stock is in, how do you think that works for determining whether a stock is a good stock or a bad stock? Have you ever asked yourself also the question, why do certain people tend to trade the weaker stocks? I mean, it's crazy. I mean, I would think I would want to trade the absolute best stock that's available. And so, as we get into answer this question, let's take a look at, a couple of reasons why you always want to be trading the stronger stocks. And IBD suggests you always trade the top 20 to 25%, or at least the top 50%. So one of the big things, reason why you want to be doing it is the top industry groups typically have the market leaders. And those are the ones that are going to help make you money. Lastly, it helps you avoid the risk. The weaker industry groups, the stocks that are in those, when the market goes into correction, they tend to overreact. And then they will basically blow to the downside much more rapidly. And they will, you have to be really careful. Now, are there times when you would buy a non-leading industry group? Perhaps. I mean, I know some of you trade Tesla. Tesla is a great example of a stock that puts in really good technical patterns and this type of thing. However, its fundamentals right now on Tesla are really bad. And so you're not going to be wanting to, basically, I wouldn't invest in Tesla to the long side for long term, but they'd be more suited for the quick swings or even day trading. So it lowers your risk management. And some of the other situation on the people behind the trading the lesser quality stock is the strength of the industry group reflects the collective sentiment of the people who are trading it. In other words, so when an industry group is performing well, it indicates a large number of traders are confident about investing heavily in that particular group. The other thing that's really great about it is normally you can tell by the chart of the industry group, it is reflected in the chart of the individual stocks, and those provide really excellent bullish patterns in order to trade with. And so very interesting. If you've never looked at that before, that is what it's about. So let's go back over here. And so that does bring us now to, now now that we've already looked at Google, let's review Amazon in just a moment. But first, let's discuss the inter-industry champion comparison. And that would be between two specific stocks that we all know very well. In the news today, there was AMD was in the news today. Now, some people may want to jump right out there and buy, and this is Advanced Micro Devices. However, do you really want to buy this? There's a couple of things that we want to be wondering about. Yes, this looks very positive from the aspect of we are building a nice little base right here on AMD. And you can see that up here. We are doing a consolidation. We pulled back to past support here, and we're getting a nice little bounce. On the weekly chart, the momentum is starting to shift up. That would lead us to believe that AMD could be shaping up to make a run all the way back up here to the 230, about approximately 230. How high is that? Let's take a real quick look at that. That's up at the, maybe up to 215 level from where it's at right now. On the other side of that, though, is the question we have to ask ourselves, well, that, this could be shaping up. Let me blow this up just a little bit. This could be shaping up into an excellent opportunity. However, we still have to keep in mind this. Let's take a look over here at what I'll do is let's go ahead and look at NVDA. NVDA is also, stronger stock, pushed up to the up, looking like a possible time for NVDA to actually be doing a correction. One high, two high, three high. What does that equate to? That equates to a potential triple top on the daily chart. On the weekly chart, we're looking at kind of a double top. And oftentimes with these topping type patterns, that will we will basically see a drop significantly, or that, at least that's what we are, that's where the high probability is. The one thing that is also of interest on the NVDA is we have earnings coming up on the 22nd. And so this earnings report right there on the 22nd, I would not want to be opening a new position in NVDA at this particular time. Let's take a real quick peek over at the let me find it here. Let's take a real quick peek over at, there we go. What does the leaderboard chart say about Amazon? No, not about AMD. AMD, right now it's not saying anything about it because it didn't pick it up. There we go. So immediately go over here and look at, okay, AMD, still look, it's hit its, and this is the red line is the 50-day moving average. It's failing at the 50-day moving average. That can be kind of typical of a stock that is showing weakness. Well, what about the composite? How does it look? Okay, one, composite 81. The group strength, though, is excellent. It's an A+. And it's 15 out of 90, 197. 15 out of 97. But take a look down here, accumulation distribution in E. That's means that people are actually selling it. Now, does that mean that this isn't going to turn out to be a good potential base? Right here. No, it doesn't mean that. It just means that those numbers need to start reversing and turning around. Look at the up-down ratio volume also. The up-down volume right here is only a 0.8, and its accumulation, and we already talked about the accumulation distribution. Distribution being low. Now compare it to our friend Tesla. Not Tesla. Belay my last. Let's look at how it compares to NVIDIA. Now, of course, I have to give NVIDIA is the #1 stock in this same industry group. Notice a much more spectacular 99 composite rating. Look down here, accumulation distribution, it's a C-. It is being bought. The up-down ratio is a 1.1, also being bought. However, what do I have showing up over here? I have kind of a cup and handle pattern. Let's take that away. And as you can see, price actions are coming down off of that potential triple top like we had seen previously. Let me go over and take a look at the weekly on this. And yeah, looking the same way. Another thing I want to note and identify, look at the relative strength. The relative strength on NVDA is heading that way, and it looks like it's pulling back into the trend line. What about the relative strength on AMD? Well, AMD, look at its relative strength line. It is pointed down. Now, it may be breaking out, and that would be a positive thing. However, it is still exceptionally low. Any questions on that regarding, and this is the first time I've actually used these charts for demonstration purposes, and I'd really be interested in please let me know in the comments what your thoughts are about using this chart. Provides a little bit of additional information, and hopefully we can zip through our presentations much more quickly. So that's what we have going with that. Let's get rid of that. The next up is, what about that comparison between Google that we saw earlier. Again, look at the relative strength going up. Look at the ratings, also looking pretty good. 80, 65 on the industry group. And then what about Amazon? Amazon, as you can see, look at the relative strength is stalling out. And it looks like we're getting a double top to match this double top here. And we may drop relative strength on Amazon. Note composite rate. It's almost like at the midpoint. So it's not in your strongest potential performers. Blow that up a little bit and stop painting it. There we go. There we go. There we go. See, 88 and a B minus rather than a B plus on the group strength. And those issues can drive the success of a stock. Does it mean Amazon's a bad company? No, of course it doesn't mean that. It just means that it could be going through its cycle where it is basically going to be doing it could be going through its cycle where it will now, get rid of that, start going through the healing process where you pull back, rest, and then get ready to go again. So that's what we've got going with Amazon. Let's see. Nice comparison between the two entities. Then let's answer this question. I promise you we've talked about why is the industry and why are they lying to you? And partly it has to do with both the S&P and the NASDAQ are weighted indices. They have 10 stocks on the NASDAQ contains 48%, almost 58% almost 50% of the value. And so if these 10 companies are doing well, guess what? It will make it appear as if it may appear as if the stock market is doing very well. The heavy weighting on a few stocks is, really a challenging thing because they lack diversification, which basically diversification allows for you to get past what shows up right here, concentrated risk. The majority of the risk on the NASDAQ is in these 10 stocks. Interesting, huh? And then it can also be misleading. Misleading in that from an economic standpoint, it makes it look like, hey, the NASDAQ's hitting all-time highs, and it's a great bragging point. But what about the other 90 stocks that are in the NASDAQ 100 that aren't doing so well? Nice questions to be asking. Which takes us then to the next question is, here's the NASDAQ, and isn't it interesting in that the S&P, note, the S&P, Microsoft, oh, that's the same as it is for NASDAQ. Apple, oh, that's the same it is for NASDAQ. Oh, NVDA. And down it goes, down to about here, and then it starts shifting out. Alphabet's in here, 2 Alphabet stocks, okay, and also over here. So in other words, Google or its a related thing, if you lump these two together, nope, they don't quite add up, but it would definitely rank them up here about there. So number 4 on the list. Same thing over on this side here. And as you can see, Costco, all of these are great stocks. And if you're looking for stocks to build a portfolio on, this makes a good place to look. However, to judge what's going on in the economy, is it a great place to look? And my vote is no. And what about you? if you think it's, if you think you need to know more information about a more truthful information, just put a Y in the comment section. Just put a Y if you'd like to see more, truthfulness with your slides. Just put a Y down in the comment section, if you will. So interesting. So we want to look at, how can we find a better process or a better way to give us a feel for what's going on with the economy and also what's going on with the markets? Well, fortunately, there is something we can do to take a look at that. Well, let's take a look at the Qs first, representing the NASDAQ. There we go. It's getting an all-time new high, right? So if I just knew about this slide, I would be sitting there going, okay, fine. And then what about the S&P? Same, all-time new high. However, there is an ETF that is out there that represents the non-weighted, and this is for the S&P, RSP, and look at the difference. Is this hitting a new high? No, it's not. So what this tells us is that not all the stocks in the S&P are basically participating in this great rally. And what about the NASDAQ? Well, QQQE is the same thing. Remember how the NASDAQ, as represented by the Qs, has already broken out and is up here. And I would venture to say, at least by just taking a look at it from an eyeball, it looks as if the NASDAQ may be a little bit, maybe telling us, telling us the lie in a little bit bigger way. At least that's one way to look at it. And look at what's going on in this entity here is, we get a nice little bearish engulfing off of yesterday's candlestick. And so this may be ready to fall. But this gap here, okay, because you recall, the Qs were all the way up here. We're up here. And so performance-wise, this isn't performing as well. Any questions on that? I want to make sure that I'm not missing anybody here. Yeah, if you've never taken a look at these, and the two tickers I'm looking at is QQQE, QQQE, and then for the S&P, it's RSP, RSP. Those are for the non-weighted entities. Okay, so anyway, hey, just drop a note down and let me know in the comments. Let me know what point you basically take away from today's session. Or any surprises. Go ahead and just drop a note down in there. And if you haven't yet, remember, hit the subscribe button and the bell to subscribe to the channel. And we'll basically be saying, I'll be saying, well, aloha. And remember, aloha and God bless. And remember, all the materials presented are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication or promise for future performance. So thanks for joining us today. And remember, let other people know that if you want to know the truth about the indexes, check us out over on AutoPilot Trading and the Market Tech Talk YouTube channel. See you guys.